Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Oh my gosh, my camera's not working. Guys, this is embarrassing. And I don't have the lights on. I don't have the music going. All right. Let's start over. How you doing? We should come straight into it here because I am super late here, and we did just have our initial jobless claims coming in at 241K versus an expected 223K. So about 20K more jobless claims this week than we were expecting. I kind of feel that the reaction to that, coming up from about 14 up to 20, is a really strong reaction given those numbers. But the market is starting to come to terms with something that we have kind of been watching for the last 6 months, which is that the labor market is not actually that strong. So let's come and see the charts and see where we're at today. Yesterday was the last day of the month, so we did have a little bit of those like end of month flows, I would say. You can kind of see here, like going into the close in the treasuries, there was a little bit of buying over there, and there was a little bit of buying over in the S&P 500. In fact, it looks really strong in the S&P 500. Oil continues to, should I say plummet? I mean, this is a pretty aggressive move the past 3 days or so. You think that they'll make a new low? I really can't say. I'm actually quite surprised by this move that we've had so far. Gold. Well, gold is kind of getting hammered a bit too. What about silver? Well, silver is about the same story. That chart in silver looks a lot like the chart in oil, doesn't it? That's curious. And copper. Well, copper has diverged a little bit. It is on the upside right now. And then we got the Japanese yen taking a hit. The dollar, not so much. The Japanese yen has not been quite as instrumental in where the dollar is going lately. And Bitcoin taking another little jump there to 96K. Jumping with the S&P 500, I would assume. So, let's see here. AO says, let's make billions. You know what? Let's just start the stream on time first. Let's one step at a time, huh? One step at a time. Oh yeah, we should make sure that our robot is on. Our auto trader is on. I tell you what, it was exactly like I thought yesterday. It did really good during that volatile time period at the beginning of our trading session yesterday, and then when volatility died down, it just got slaughtered. Once in a long time you were late. Well, I usually started at 6:30 right on, but I really would prefer to be like 6:25, 6:20 to give us a little bit of time to prepare for the news, you know? Let's see here. Is this really 6 days up for Zien? We are due for a red day. Yeah. Well, so this whole thing kind of makes you wonder still, doesn't it? Because when the treasuries were selling really hard, there was this whole question about whether it was China or Japan or somebody else like that selling, or a basis trade blowing up. And the problem kind of is that Donald Trump kind of backed off. So I'm not sure if the recovery that we've had in the treasuries is primarily due to Trump backing off, or if it is due to the it was just a basis trade and that's over. Of course, I would say that especially the last 2 days, it's the labor market, and that's why we're up like 6 days in a row. So, then the problem is we're not really going to know for like 2 months. Some people say that Donald Trump backed off because they were selling treasuries. But if we get there in 2 months and we find out, nobody was selling treasuries, it was just the basis trade blowing up, then does Donald Trump get more aggressive again? Well, I don't think so because I don't believe that theory. But if you believe that theory, then that would be the question, right? But I should note we are kind of pushing back up. It was a pretty steep pullback, but we are kind of pushing back up and holding. We have some other stuff today though, right? We've got ISM manufacturing numbers today at 8. I'm all prepared. I already got my shoes on and everything. So all I got to do is pull my lunch out of the fridge and go. Except for I'm not even sure if I have to do that because, well, I don't have it here. Hold on a second. They have a food cart comes on Thursdays, so you check what's coming. Decide if I have to take lunch or not. 18. Oh, we do need to change our. Oh, I didn't even. Yesterday, I was just not thinking about that it was the last day of the month, and I wonder if the issues that I saw in the liquidity and the micro yield futures that would kind of had me like I shouldn't trade this. If it would have been better if I had been in the May contract. It requires such a freaking long password on this laptop that even though it's a password that I know very well, I screwed up a lot. I guess I can just take a lunch, and if I don't eat it, I just leave it there. Okay, let us roll these over here. May is K. It did not. Oh, you know why? Because it gave me May 2024. May 25 is what we want. Oh, I guess I need to update my definitions. I don't know. Even in May, the liquidity is a little sketch.
Order submitted.
I feel like that one's a little late, but we'll run with it. CNBC is reporting that the U.S. Chamber of Commerce is asking Trump for tariff exclusions to, quote, stave off a recession. Isn't it kind of like a little bit late to be asking for those sorts of things? No, good morning, Vital. I think trading is a legit, full, real profession which a person can do full time. True that you have to short term speculate, but if you learn it good enough, you'll be safe. It's a hard job, but real. Also, it can be a full time job, but I very, very strongly disagree the most with when you say if you learn it good enough, you will be safe. If you are trading, you are never safe. You will never, if this is your vocation in life, you will never truly be safe. Remember, the most famous day trader of all time, Jesse Livermore, basically died bankrupt. Okay. That's the reality of trading. I tell you what, it got a good entry and it got a good amount of like favorable excursion, but then it's just like flying right back in its face, isn't it? Basically self-deleted bankrupt. I mean, he had a lot of other stuff going on at the time. I don't think that he killed himself because his trading was failing or anything, but it's always really funny to me that Jesse Livermore is viewed as like this hero that we want to become, because it wasn't all that. He became rich twice. I honestly think that he was just a degenerate gambler that got lucky twice. That's what I think. But I think that, the book about him, it's a classic for traders. And I think one of the reasons that it is so instructive for trading is that it shows you that orders do have impact, and that you could come in and buy a ton of something and make it go up. And it kind of reveals in a way that the public never had before what's actually going on in the financial markets. But when you read it, it also is kind of like he was a degenerate gambler that got lucky twice. Like was it the first time or the second time that he really made it big? No, I think it was the first time that he really made it big. It was, he basically went short the market for no apparent reason and then went on vacation. And it just so happened that there was an earthquake while he was on vacation. Okay, like he did like the most degenerate thing you could possibly do, and he got lucky. He got lucky. It's so wild. But the bigger thing is I really feel a responsibility to temper people's expectations, because what I see a lot of out there is a lot of kids that are like in their early 20s and saying, oh, I'm going to become a day trader for a living. Like that's going to be my thing in life. And that is probably like the worst life decision you could possibly make at that stage of your life. Okay, get rich first and then become a day trader. If you really want to be like trading in the markets right out the gate, go to an Ivy League school and get hired by an institution. Go into the commodities space. I think that would be a really good place to trade the way that is, we're kind of interested in. But don't just go out on your own and say, I'm going to start with $1,000 and become a millionaire. It's not going to happen that way. And you're going to pass up so many other opportunities that are better opportunities. I have the plan then. Let's put a 20 long ES and go on vacation. We hope we got this, guys. That is kind of the degenerate play right now, isn't it? So, it's, this always happens though, when we get these kinds of bounces in the S&P 500, nobody really believes in it, do they? Nobody really it really seems to me like nobody really believes in it. I met traders who work for a bank as day traders, and they said it's possible to do similar thing freelance, but they like it when it's more secure. So you know what I would have asked them is I would have asked them what % return per year they would get. Because I think one of the things that they would not realize is how difficult it is to scale it. Like, people think that you're going to come in and you're going to start with $1,000 and like 5x your money every year and yada, yada, yada. And that's the thing, is that if that's the amount of capital that you're starting with, you're going to have to hit insane returns to be able to make a living off of it. But a lot of the time when you've got these guys that are trading for a bank or whatever, and granted, when you're trading for a bank, you really aren't doing the same thing that we're doing anyways. Like, you're not speculating for the most part. The banks pretty much got rid of all of the speculation on their desks because of the rule. I forget what the rule was called, but so they might be only making a small percent per year in reality, like less than what the S&P 500 makes. And yeah, you're not going to live on that unless you're already a millionaire. I really think that tempering your expectations and understanding what is actually realistic performance as a day trader is a prerequisite towards being successful in day trading. Because if you are always pushing for these excessive, unrealistic targets, then you're basically always going to blow up. Right? It's not until you understand what's realistic and just take what's given that you're going to be able to like find consistent success in trading, right? And it's just like, okay, but that's going to be more like 5 to 20% per year and not like 10x per year, which is what most retail traders are expecting. If your bot loves volatility, why not put it on NQ? We could try that, I suppose. When we tried putting it on oil, I was kind of finding that it didn't. It just wasn't calibrated to that market correctly or something. It just wasn't taking trades. I don't remember, actually. I don't think that we really looked into it. But the thing is that I don't think that it's explicitly that it loves volatility. What it's really good at is situations where there are strong trends in the order flow imbalance, right? So a situation where you get like a 53% imbalance, and then that imbalance persists long all day. That's what it works really, really well. And when you get these situations where the market order imbalance is crossing 50% all the time, then it ends up taking a lot of worthless trades. So right here in this situation, it took a trade. It's basically at its break even and the market's not going anywhere, right? Because the imbalance hasn't persisted. It's kind of like I really don't think that there's a whole lot going on right now because they're waiting for ISM, right? So if I put it over on NQ, well, there's more movement there, so that will help. But what we really want is we want a trend. We want a persistent imbalance in the market orders. And if it's going back and forth, then it's just going to probably take a lot of noise trades and probably lose even more. So the first thing is that we need to help it to capture part of the spread. I wouldn't expect it to get it every time, but even if we got it like 50% of the time, that would help a lot. And then a little bit of filtering to not take the trade when it's kind of already crazy. Sorry, not like when it's kind of already crazy, but like too late in the trend is not a good trade. Too late in the trend is not a good trade. And when there's like not enough activity level. I think that to filter it on like there's not enough activity level might be tough though. And you have to look at a couple of different things to try and sort that out. But I don't think this, like, adding a higher level market order imbalance, I don't think that that's the key. I'm hoping, I guess I'm lazy and I don't well, it's not that I'm lazy. I just don't have a whole lot of time right now, but we got to get the machine learning stuff involved in here. I really think that the machine learning could really help it here. Anyways. All right. Uzi says apparently China's dumping gold. Do you have where do you get that from? Because I'm really curious to understand why gold is down so much today. And some sort of a story confirming that China is selling for reasons would be significant. A zero hedge? Okay. Uh-huh. It's a premium article. Well, I could read it. Tell you what, I will read it to myself and give you a summary. Goldman's Gillard points out, today China liquidated 1 million ounces across SHFE and SGE. China basically sold what they had bought last week. They also say CTAs need to sell some. So that story is not like a deep dive into some. It's a market year article. So they are showing that China did some selling, but China did some buying last week. So they basically sold what they had bought last week. Seems to fit. It's the same with CL. Well, CL's probably got to be something else. Glad I don't pay for zero hedge premium. You know what? I've really found that one to be valuable. Most of the other subscriptions that I've tried were useless, but zero hedge premium has been really valuable because zero hedge premium gives me those order flow reports, and that's like the most valuable stuff. If I could get something that was like those kinds of order flow reports multiple times per day, that would be worth a lot to me. I was gonna look something up and now I don't remember what it was. Do you just use order flow or you use some technicals? Well, I don't really do any kind of analysis on 1 minute price series because that's just noise. Our edge is going to primarily come from informational inefficiencies, things that we know that other market participants don't know or are not factoring in that can help us predict future orders. And then we're watching the order flow to see if the order flow matches our expectations. And of course, watching the order flow kind of helps you learn to what you would expect, how different types of players are going to execute and things like that. And what's the name of the bypass? Every time that I've tried using bypasses on certain websites, it's like it will only work for a while. And so next time I come in, I have to use a different method. And I've kind of turned it, like, especially for I would be interested in a Wall Street Journal subscription and trying it for a year. But like the what's that other one that basically turned into a liberal rag? The Washington Post. Boy, I like when I come to the articles from there, I just move on. It would always drive me absolutely crazy that so many of their articles would go viral on Reddit. Like, why? Nobody here has the subscription. Nobody here is paying for it. You can't honestly tell me that these are genuine activity pushing it up. They are starting to push down a little bit more now. Tried Metastocks. I have used that. I'm not sure what you're saying here with, I think it's impossible to stay without for trading bonds. You need to rephrase that. But I found like we bought it for a specific reason. The specific thing that we were trying to do was trying to get an accurate measure of what the cash bonds were going for in terms of yield so that we could arbitrage over here. And my end conclusion was that closest that you get is a basis point. And so it didn't help. So there were some other issues with it, but yeah. I didn't really get a whole lot of information from it that I wasn't already getting. I think that would be a different story if you were using it for stocks. It was giving me a lot of information about stocks, and including breaking news stories that I think would be valuable. What is IST? But the COT reports, you can get that through multiple ways. I really still wonder, that's another piece of research that we need to do is like, can you use the COT reports for some sort of a momentum strategy? Because it kind of seems to me that by the time the data comes out in the COT, that it's already kind of useless. Like you should already know what it's going to say. I love hearing allegiances to a platform as if that's the difference between a profit and loss. Let me tell you something, Spencer. If you have a Bloomberg terminal, you can straight up make money with some of the information in that. In fact, I would say that generally speaking, most traders, if they have a correct understanding of the market to begin with, would pay for the cost of the Bloomberg terminal with the trades that they would make from the Bloomberg terminal. The information that you get from the Bloomberg terminal is that effective. Again, here I think you would have to be trading stocks to do that, but there's a reason why all the big institutions pay the big money for it. And this again, yeah, you know, this is just one of those things that grinds my gears. This is something that I don't understand why the retail trader doesn't understand this. But the strongest edge is always going to be being informed. You know some sort of breaking piece of news before everybody else. Heck yeah, there's some edge in that. Don't compare a retail platform to an institutional platform. Well, go and try using the Metastock thing, because it's basically a poor man's Bloomberg terminal. It's well to be more specific, it is Reuters knockoff Bloomberg terminal. So it's not as great as the thing that really makes Bloomberg terminal valuable is the data subscriptions that you can get through it. But the Metastock platform, or sorry, I forget what they call it. Icon. I think it's called Icon, right? It's a decent enough platform. It gets the job done. Yeah, and you get the Reuters news is pretty good. So I think especially if you're doing stocks, there is some value to paying that. It can cost. Yeah, no. So if you're using Metastock and you're using the stock thing, I think it's like a few $100s a month. I don't remember. I'm too lazy to pull it up right now. It's within reach of a retail trader, and you do get good information from it. Similarly, I would say that there is absolutely some edge in the zero hedge premium articles. And I've never tried their more expensive subscription, but I think that would probably be the case as well, because then you're getting these reports that people pay thousands of dollars for. I don't understand how they're able to do that. Why they haven't been sued and so forth with that, but whatever. Okay. So Spencer, like Metastock is a completely different thing from Jigsaw. Like you're comparing apples and zebras. Oh, did Uzi tell you what bypass he was using? I didn't see the name of it. That's funny. I So I'm trying to remember who it is. Yeah, here we go. Because I one of the people that I would always see make this argument is Vinny. Vinny would make this argument, and it's a dumb argument. It's like he doesn't understand the difference between a platform and a strategy, and conflates the platform and the strategy, right? Yeah. like Vinny Emini or whatever. That was something I remember him bringing up over and over in some of his videos. Was like he would conflate Jigsaw with a particular strategy, when the reality is that the Jigsaw is just an execution platform, and it shows you information on the DOM. Now, we do have some empirical evidence that order flow data, or rather market depth information, can make strong short-term predictions. Whether that will lead to a retail trader to be profitable on its own is a completely different question. I really don't see how you're going to really understand what's going on in the market without having the DOM up and watching the order flow there. So I would kind of put it as kind of more, it's more to me based than it is edge, right? Like it's a prerequisite for you to be able to understand what's going on and everything. And then you add on top of that the edge, which would be the informational content that you're getting from elsewhere. And now all of a sudden you have a really powerful thing, right? But there are plenty of people that try to just trade purely off of the order flow. There are some people that seem to be pretty successful with it, and I don't know exactly how they're doing that. There's plenty of other people that aren't. There's going to be like a certain random distribution. But it doesn't really tell you anything about the platform, right? The platform just allows you to execute, and it's the best way to execute, period. Your coder, so it could be easy for, well, we had a study. We brought it up in a video. I won't want me to go find it. What was this? That one. I could probably find it faster by Googling, but what's this one? Oh, the VPN one. Did I put it in the best? No, wait, what? That's... There we go. I might not have it on here. Is he doing good cop, bad cop again? Probably. The way, like... So Uzi and I have kind of gone back and forth on, like, who we think it is. And, you know, we're kind of always a little bit like... I kind of feel like we should just have that conversation out in the open now. Are you okay with that? You want to we just talk about it out in the open? Is it me? No. Let's see here. Because Jean-Philippe is like, you know, does stuff with graduate students. There's like so many, he puts out so many articles now with his name on them. I can't remember the name of the one. Mhm. Oh, here it is. Understanding the microdynamics of asset prices and modern electronic order books is crucial for investors and regulators. In this paper, we use an order-by-order Eurostoxx database spanning over 3 years to analyze the joint dynamics of prices and order flow. In order to alleviate various problems caused by high-frequency noise, we propose a double-course grain procedure that allows us to extract meaningful information at the minute timescale. We use principal analysis to construct microstructure models that describe the most common flow return patterns and allow one to separate them into bid-ask symmetric and bid-ask anti-symmetric. We define and calibrate an auto-regressive model that encodes the dynamical evolution of these prices. The parameters of the VAR model are found to be extremely stable in time and lead to relatively high R2 prediction scores, especially for symmetric liquidity modes. The VAR model becomes marginally unstable as lags are included, reflecting the long memory nature of the flows and giving some further credence to the possibility of endogenous liquidity prices. Although very satisfactory on several counts, we show that our VAR framework does not account for the well-known square root law of price impact. I don't think that one is good, but I don't think that that's actually the one that I was looking for. No, I do think it was this one. Maybe they've just updated it. That's what we're just looking at. No, that was it. So, oh yeah, and then there's the elastic market. Okay, so basically what they did is they took the order book, they put it into a large language model, and then they found that the structure of the order book clustered into two major categories. And then they found that especially when it was of a certain category, which was when the order book was relatively even on both sides, that it led to extremely effective short-term predictions. Okay, here, give you a link. So basically they created a robot that duplicates what we're doing reading the order book. So there are, of course, a lot of other reasons why we would think that market depth information is valuable. But I think that that's like the best one that we have. So I spent so much time looking on that. Oh, remove paywall. Okay. I'm using bar chart, Metastocks, Financial Juicy Elite, and I can say on many occasions I find a good edge in trading futures, but it's only my opinion. Okay. Jigsaw has a really nice platform. In recent days, Futex has published good videos about order flow. Oh, I don't know that. I could go and look at that and see what they're saying. The Vatican has 17 Bloomberg terminals, and they have the most terminals per capita. That's crazy. I don't know what kind of software they're using, but the DOM looks like shit in my opinion. I really like Jigsaw more. Yeah, I really have not found a DOM that is better than Jigsaw's. And first of all, execution is better on a DOM. Just straight up, it is. There's no question about it. And there is absolutely some edge in being able to see how much liquidity you are hitting into. Okay. Because if you always put a market order, then you're always giving up the spread. if you always put in a limit order, then sometimes that limit order is just not going to get filled, right? But if you can see what the liquidity is at that time, I know if I want to buy right now, very likely to get filled at 17. There you go. Would have just gotten filled. So I know that there'd be no point in hitting with a market order at 17.5 to just put a limit order in. Okay. So you don't always capture that spread, but it's better than just always using a market order. So that right in there is something that's very provable logically, that there's an edge in it, right? There's an edge in executing with the DOM and watching the market depth as you're executing, right? But then we have these other studies where they're using machine learning and so forth to kind of read the DOM and make very good short-term predictive calls. And like I said, I kind of view the DOM as kind of more as a base, like a prerequisite. We need the DOM to be able to understand what's going on, but the edge comes from the information that comes from outside of the exchange. So to me, like, the real edge comes from reading Zero Hedge and all of these other sources and talking to you guys and following Twitter and knowing more about what's going on in this particular market than anybody else in the retail space. And that's where the edge comes from. Okay, big player is not going to show all their cards by displaying all their orders. No, they don't. So when you are watching the DOM, so Spencer, I have a video. You can go watch. So again, where it's like, okay, so we're pretty sure that it's the same guy that we banned yesterday. What was his name yesterday? I don't even remember anymore. It's that quick, but it's surely it's the same troll. I'm kind of like, this guy doesn't actually pay attention. He's doing something else. He's not actually paying attention to what we're saying. How far back is it? It's this one right here. Ooh. Yeah, it was like Aminesh or something like that. Yeah, you go and watch that video and I address that question pretty thoroughly. You're not just watching the resting orders. What you're really watching is you're watching the changes in the orders. So if I see a big market order hit and then all of a sudden I see a change in the resting orders, that's the sort of thing that I'm looking for. Is seeing the market makers reacted to that by pulling their liquidity. It's a significant thing. I want to try Sierra, but I hate their yeah. Well, the issue that I have with Sierra charts is still that they're basically stealing all of their features from everyone else and just kind of like packing it in. And so you get a UI that isn't really very focused. It's very difficult to kind of figure out how to get all of the settings the way that you want and things like that. And so they're not really going to be the innovator, right? Like, so if it's Jigsaw versus Sierra charts, Jigsaw is going to release new features and then Sierra charts is going to get them like a year later, right? And is there something Sierra Charts does that Jigsaw doesn't do? Well, custom indicators, but that's why I use NinjaTrader. I digress. Is one cheaper than the other? It seems like Sierra Charts is cheaper at first, but when you actually go through the costs, the monthly cost is about the same. So if you're going to use the DOM, I really think that Jigsaw is your best option. I'm not going to say that the platform is perfect, but I really think that it's the best in class. The only platform that I would really put above Jigsaw is trading technologies. And that's like hundreds of dollars a month. So not very many of us are going to be using that. It's the same market maker on both the bid and the ask. Okay, why does that matter? It's still a significant thing if the market maker has decided to pull liquidity because of an order or a certain event or something. I really don't understand why somebody would put themselves in this situation to go and argue with somebody without going and doing the research first to really understand the thing that you're arguing against. You have basically decided that the way that you trade is the God strategy and everything else is useless without actually understanding anything else about these strategies. And so all of the arguments that you're coming up with against it are just misconceptions about how reading order flow works. And every time that you come in and you argue, you just look foolish. Show your results. If you show me a 5-year track record, then we can go talk. I think that Spencer... So I don't know. What did Uzi say earlier? Like, should we just have this conversation out in the open? I don't remember he said anything. So Uzi thought that it was our friend Ace. Uzi thought maybe it was Ace, but I was kind of like, nah. The personality doesn't seem like Ace to me, right? So who are some other people? And there's been 2 or 3 people that have kind of come through that I thought maybe would do that. But the thing that stands out to me about this troll is their ego. Like, they're just no humility whatsoever. They seem very narcissistic to me. Like, this whole thing about going and criticizing reading order flow, for instance. Look, there's empirical evidence about it. You can go and read the empirical data. I can't prove to you that you're going to be successful with that, right? There's a distribution of it and success, and you can get lucky and all of these sorts of things. But there is some empirical evidence out there for it. So that's what I would cite as why we follow order flow. And to come in and start making arguments about it without really understanding how it even works is exactly the sort of thing that I would see a narcissist do, right? Is they're going to do whatever they can think of in the moment that they think elevates themselves and drags everybody else down. And so it's very, very narcissistic. And that is totally Vinny. It's also inner circle trader. I'd say inner circle trader is probably even worse, but I doubt that it's inner circle trader that's trolling us, right? It seems very, very narcissistic. Well, we know that Vinny lost, like, over the years, his losses account to like over $1 million. That's freaking crazy. So if it is Vinny, I don't think that there's any chance that we would get his record, his trading record, right? Jeez. Yeah, if you watch interviews from X Jane Street or SIG traders, they all express edge in watching the order book, for sure. Like, the crazy thing is that of the things that we can empirically prove about the market, there is a lot more of them in analyzing order flow than almost anything else. When you go in and you analyze price on its own, especially intraday price, there's practically nothing. All of the research that we get says they're martingales. It's just random, essentially. Well, it's more complicated. Well, martingale is more complicated than random, but you can go and look that up. I want to talk about that right now. On longer time frames, there's momentum, and that is an effect that you can prove, momentum, but that's long time frames. Okay, volatility. There's a lot of things in volatility. Okay, but the most proven empirical properties of markets come from the order flow. So can you, as a retail trader, make money from that? I think that's going to be up to you. I personally think that you stand a better chance of being successful by knowing proven things about the actual market, and rather than just trusting what some random person on the internet said, or what the folklore that gets passed down from trader to trader. That's the way that most people are trading, right? Okay, I don't think Vinny would waste his time and not make content. Oh, that's right. You did say that. I think that is a good point. Well, I don't think that he would. I totally think that he would come and troll because we know that he did, right? Like, the whole way that thing started was that he came into our Discord and we caught on to him pretty quickly because he was spouting nonsense and we banned him, right? So he does waste his times with those sorts of things. He would probably be streaming though, no? He would be streaming and we would be able to go and see that he wasn't over here chatting with us. But the pattern of the person that I get is very much in that vein. And it very much seems like it's some attempt to try and pull down Seth and elevate himself. Yeah. Everyone should have their own idea. If we had the Holy Grail, we wouldn't even be here talking. It's so true. Like, the Holy Grail doesn't exist because discovering the Holy Grail would basically destroy it, right? Yeah. I don't dispute Overflow. I dispute your assertion that the Dom is Holy Grail to reading. Well, okay, I don't know when we say, like, what would be a Holy Grail to reading Overflow. I would say that reading the Dom is the best way to read the order flow, because anything else that you're looking at is summarizing it in some way, right? If you really want to get all of the information, see all of the events, you can do it as a human looking at the Dom. Anything else that you're doing, putting on it in a chart and things like that, involves doing some sort of analysis and smoothing and so forth, and some informational content is lost when you do that. The funny part is he probably never said Holy Grail or anything like that, or implied. You probably just built, yeah. Just. I mean, the thing is again, he's not really paying attention. He clearly hasn't watched any of my videos. Clearly doesn't pay attention to the whole stream when we're on the stream, and so he constantly makes arguments that really don't fit with anything that we're saying. He's fighting a phantom. Okay, by the way, we got PMIs in 13 minutes. I gotta prepare myself because it's like I get to watch it and then I gotta go. I hate it. Dom Timon says, well, Timon Cells is only going to show you bills. Reconstructed tape would show you market orders, but you're not going to see the stacking and pulling and bids and offers. Show me the results of your trades. So normally I would be like, let's pull it up and everything, but because I've been unemployed, we haven't taken trades since 6 months, so there's not really anything to show you right now. But the argument is, look at the empirical evidence. So why do you fight against making an empirical argument so much? I don't understand this. You can make logical arguments against misconceptions about what you think reading order flow is or what you think that we're doing. But can you make an empirical argument? Can you say, well, here is some market data, and here is a property that we can see from this market data, and you can see that this property holds regardless of what data set you're looking at. That's a real argument. Some anecdotal evidence about that somebody made money from it once is not a real argument. That somebody lost money from it once isn't a real argument either. I don't know. The thing is, I was doing quite well before we lost the day job. But that's the other thing, is I've already shown you that. When are you going to show your results? Why does he need to show you the performance? He's not selling any system. Yeah, that's true too. Here on the stream, we're primarily interested in talking about empirical evidence, and I'm not selling you something. I mean, I wouldn't say it's fair to say they were not selling anything, right? Because we do have the Jigsaw affiliate links, and we do have the tools from NinjaTrader, right? But I'm not saying in those things that is a system that you're going to use to make money. No, those are tools. Those are tools that are really, really good tools. I think are going to help every trader. You're still going to have to come up with a strategy, though. But again, the thing is, this guy, he can't seem to separate a strategy and a platform for some reason. I'm not on a stream making, but you are. You're on my stream making bodacious claims. You are. The thing is the claims that I'm making. Let's be really clear about what's happening. The claims that I'm making are that there is strong autocorrelation in the sign of order flows. I can go and I can show you the data and prove that. That's my claim. What's your claim? You don't have one. Your claim is I want to try and undermine Seth's stream every day for some reason. Tell you what. You go and you come up with an empirical argument and come back tomorrow. And if you have an empirical argument, then we can talk. If you don't have an empirical argument, we're going to ban you right away again. Because I just don't have the time to sit and argue with somebody every day about Seth. Okay? Sometimes we make money, sometimes we don't. We were doing pretty good. I haven't gotten back into the point where I really want to take trades again, but we might get there. It's going to be hard because I can't really trade after 8 o'clock, right? And some of the best opportunities that we're getting are from news that releases at 8 o'clock. Oh, I wasn't even paying attention to the messages that Meth was making, but yeah. But you think that it's two people trying to do a good cop, bad cop routine to try and undermine the stream, right? Yeah. I don't know. The last two comments that Meth made, though, seemed fine to me. I don't know. I gotcha. All right, because he's probably doing it from his phone and a PC. That makes a lot of sense, yeah. I mean, the thing is like what the damage that it does is that then you have the possibility of falsely banning somebody, but I don't think that that's ever happened. So, but you know, for a while there, we said we're just not going to do anything about it because then he keeps switching names and so forth. I really think that what we should do is we should immediately ban him unless he's making an actual empirical argument. Because the topic of the stream is not Seth. You know, I guess we could make the topic of the stream Seth, but that wouldn't make a very interesting stream in my opinion. I don't think that enough people care about him to argue about it like that. Except for this one guy. I don't know why this one guy wants to argue about Seth. Oh, new username. Disagreeing with him immediately equals also him. That might be true. That might be true. Because what he tries to do is he tries to make another account that will agree with him. And then when we ban that first account, then he switches to that, the good cop account starting to attack me. Yeah, because he thinks that it will ban him slower. But I think that we just have to stay focused on, like, what are we trying to accomplish here, right? We're trying to understand markets better, get better at trading. So if he's talking about things that aren't towards that goal, then we just ban him. Yeah. That's my favorite obvious thing, is the attacking himself and then saying the same things an hour later. Yeah. Now, my favorite obvious thing is the type of arguments that he makes. He'll come in and he'll completely misunderstand everything that we're saying or what we do on the stream, and then he'll just make an attack on me. And then he'll be like, well, show your results. When we've done that like 20 times now. It's a wasted effort on his part because it's so obvious. Just save yourself some time and accounts and limit yourself to one at a time. But the problem is that he has a narcissistic injury. Am I wrong? I guess we can't really know for sure, but I think that he has a narcissistic injury. And so as long as we're coming in here laughing at him, he's going to be coming back doing everything that he can to try and, you know, get everybody to think he's the greatest. That's one of the funny things I've found about narcissists. So when a narcissist comes in and they're like, I'm the greatest thing in the world, and then you are like, no, you're just a shithead and nobody gives a fuck about you. They can't stand it. It just eats away at them forever. Because that absolutely everybody has to think that they're the greatest.
Order canceled.
It doesn't really say much that would I think that he does though. Every argument that he makes implies that he has it figured out and I don't. But it is true though that like all of his arguments basically come down to I'm going to shit on you even without really understanding what I'm even saying, which is kind of weird. It's like if it was another streamer or sent by another streamer, it would be like, well, just go and undermine the stream so it never takes off. But I don't really think that does anything. I don't know. A lot of the time it does provide really good teaching opportunities. It's kind of like sharpens the blade, I feel. Okay, we are getting the market depth polling now in preparation for the news. So we're going to get ISM manufacturing PMI. They are looking for a reading of 47.9 versus a previous reading of 49. I think that it could be even worse than 47.9, but let's see. I'd be really surprised if it was above 50 though. Like how early I called it. Yeah, well, you did. It was like from the first comment for sure. That is one thing, is that we should not reveal our tradecraft of how we're identifying him to him, right? Because then he'll change his tactics. But it's a very obvious, like right from the get-go, that it's him, isn't it? All right, here we go. Okay, so 48.7, so 1 point higher than expected. Prices paid came down from what they were expecting, 69.8 versus an expected 73. But they are selling it still. Interesting.
Order submitted.
Oh, of course, now the robot takes a trade. The sad part is the robot was short and closed it before the... Well, I could keep the stream going so you could see how the robot trades, but I don't think that anybody really cares, and I think it's going to be an absolutely terrible trade, you know? So I think we'll just shut the stream down, and you can ask me tomorrow if you're interested. I've been here a long time. Some of us who've been here a while reserve the right to argue with you occasionally and call you out if you feel like it. New usernames don't have that privilege. Okay, that's fair enough. That's fair enough. Especially this, I really think that when people try and turn it into a pissing match between like, well, what's your performance versus my performance, that should be instant ban. I kind of feel bad about it just because I know that a lot of people out there, they want to learn from somebody that they think is being really successful and is making a ton of money from it. I'm not making a ton of money from it, right? The trades, I've done really well in my trading, but the trades that I'm taking are like $10 at a time, right? So you're never going to give that from me. And maybe they understand that and they think that, well, you know, that hurts his like social proof amongst people. And so I want to point that out every time, right? But the whole problem is that that's not an effective way to build a strategy. It's like the worst way to build a strategy. You really need it to be empirical evidence. So instead of arguing with it, we should just ban them. Should just say, listen, empirical evidence or GTFO. You want to go and get a study and we can talk about the study, then I will talk about it all day. And, you know, why I think that the results of that study are useful or not useful or what it means. Like, that's what we're here for. Not to talk about me. So, for sure. For sure. And, you know, if they actually bring up a specific point about, like, reading order flow or anything like that, we can talk about those. Because there are misconceptions, and that's useful. But when it turns into, well, okay, so then, like, show your trading. No, that's not what we're doing. Every trade that I've ever taken is, well, not every trade, but almost every trade that I've ever taken is recorded live here on the YouTube. I've shown my history several times. You can go back and find it. We don't need to keep harping that point. Okay, but it is time for me to get going. I will see you guys tomorrow, non-farms. It's going to be a big one. It's going to be the big one. So prepare yourselves in the meantime.